One stock just cracked today's top 5 for July 9th. Baba. Alibaba just ripped 11% in one session, the biggest single-day pop since September 2025. After getting hammered for months, this Chinese tech giant is suddenly flying again. But here's what matters. Is this a real reversal or just another dead cat bounce in a stock that's been absolutely pummeled? We're breaking down exactly what the technical setup, options flow, and volume are telling us about whether Baba can actually sustain this move or if it rolls over into more pain by week's end. Baba is trading at $108.98. And here's the context that matters. The stock is still down 42.9% from its 52-week high. That's a brutal 43-point reset. But that bloodbath is actually creating the setup for recovery. Today's 11% surge came on 3.25 times normal volume, meaning this isn't some thin bounce real money is buying. The $108.98 price is now testing resistance at $121.31, while the 50-day moving average sits at $120.16 just overhead. Break above $120 and you're in fresh air. Hold below it and this could fizzle fast. RSI is sitting at 51.37, dead center in the neutral zone. That's important because it means this bounce hasn't gone overbought yet. There's room to run higher without immediately triggering profit taking. The moving average structure is bearish on the surface. Price is below both the 50-day at $120.16 and the 200-day at $144.91. But the fact that price just rallied to the 50-day on heavy volume suggests that level could act as a springboard, not a ceiling. Volume at 3.25 times average confirms real buying pressure, not algorithmic chop. The headline says Alibaba stock surges by the most since September 2025. But we don't have the underlying reason yet. Is it China policy relief? Earnings beat rumor? Sector rotation into cloud? Without the thesis, we're flying blind on sustainability. That's the single biggest risk. This could be a one-day news pop that reverses when volume dries up tomorrow. We also don't have an earnings date, so no ticking clock on this trade. The R/R ratio of 0.09 is atrocious, suggesting this is strictly a 2-3 day tactical trade, not a swing hold. Here's where the smart money vote shows up. The put-to-call ratio is 0.468, and that is extremely bullish positioning. This means for every dollar bet on the stock falling, about $2 are betting it rises. That's not retail FOMO, that's professional options traders stacking calls, which typically lead the underlying by a day or two. ATM implied volatility is at 49.71%, moderately expensive but not extreme. Buying calls here isn't a discount, but you're also not overpaying. The bullish skew in the options market actually validates the technical breakout. If institutions weren't confident, we'd see put buying. The verdict is watch with neutral conviction, and that's honest, because the setup is mixed. The bounce is real, volume confirms it, and options are bullish. But we're still below both moving averages. RSI hasn't gotten hot, and we don't know what triggered this. So here's the play. The entry zone is $103.19 to $106.29. We're already at $108.98, above that zone, so new buyers are taking on risk immediately. Better play is to wait for a pullback into that entry, then risk the stop at $97.57. Target 1 is $110. Target 2 is $121.31 at the 50-day. Target 3 is $189.84. That R/R is poor, but you're not holding to target 3 on this setup anyway. Baba is a show-me setup right now. The 11% bounce is undeniable. The volume is real, and options traders are bullish. But without understanding the catalyst and with the stock sitting above the entry zone, the risk/reward for new buyers is poor. Watch for a retest of the $103-$106 entry zone for a second chance. Or if Baba closes above $120 on continued volume, it could accelerate toward $140 plus. This isn't a conviction buy, it's a tactical bounce trade. Stay disciplined, stick to your stop, and remember, after a 43% drawdown, 11% pop doesn't change the long-term picture.